up on the screen because we marked yesterday as a day of resilience. Today we started off marginally in the green, have slipped into the red, if you will. And remember, banks are not doing all that bad. So it's the other sectors which are now coming to the fore because the Nifty bank is still marginally in the green or flattish, if you will. But nothing kind of a trade on the large caps, really. The market breadth has also constricted a little bit. It was very good at the start of the trading day, came off a little bit in the green, but nowhere as close to as good as was when the day started. Let's get the heat map of the Nifty 50 on the screen and just show you what's moving and what's not. So FMCG has been the culprit in the session today. You see Nestle, you see Britannia, I've seen HUL at the start of the trading day. So those stocks have a problem. Some of the financials, HDFC Life, Bajaj Finance, so the non-banking financials have also come under a bit of stress in the session today. And while CDMO players may be doing well, and our colleague Varsha will a bit later on come in and talk in detail about the Biosecure Act, but the pure play pharma numbers, the non-CDMO, the generic pharma makers, Cipla, Dr. Reddy's, etc., have taken a bit of a stick in the session today. So that explains the red. What's countering that or trying to counter that? Titan up about 3%, LTI, Mindtree, Wipro, so some bit of spunk in IT as well. But that's few and far in between. So very few stocks which are really standing out and which explains why the market is just trading absolutely flat in the session today. Before I hand it over to Tamanna, let's just quickly see the mid cap and small cap indices and how they have done in the session today, because individual stocks have done okay. Mid caps 0.5%, small caps 1%. So the broader market is doing well. Your portfolios might be doing very well on a flat day on the Nifty, and that is what is welcome, actually.
Yeah, at least, most people are making money, hopefully, if not hopefully just on the Nifty. But, perhaps more enthusiasm would have been expected on the key indices, considering the very bullish take that Morgan Stanley had on India could possibly become the largest emerging market, but we're not quite seeing that. Before I go to specific stocks, I just want to pull up European markets as well, because remember, we're looking at a cycle of a lot of dependence on what global markets have been doing, and how US markets react tonight is also going to be very effective and very impactful on tomorrow's day, and mixed sort of trade on European markets right now. All right, stock specific. Zomato, I think, is the biggest buzzer of the day in that sense, and it's interesting. Every time there is a new brokerage house that is equally bullish on Zomato and the stock runs up once again. This time is JP Morgan, 5% up on the stock. Their target price is 340 rupees. Goldman Sachs note as well looks at AU Small Finance Bank, Chola Fin among them. Some of those stocks also gaining today between 2 and 3% up. Prestige has seen a bit of a negative impact on their QIP. Their QIP impact is showing with 5% down on the stock. I want to look at the new listing, Raymond Lifestyle. So it had a bumper opening at least and still about 83% up. We'll pull up Raymond as well. So Raymond was sentimentally quite positive through the day or through the morning last couple of days. But now that the listing has taken place, you're seeing a bit of pressure in the Raymond counter as well. We can pull it up here if required. Okay, there it is, about 3% down on Raymond. So these are some of the key buzzers, but broadly, I think, Niraj, it's still slightly lackluster.
Caps for sure. Broader end of the spectrum, as Tamanna said, about 1% higher for the small caps. So that part of the market shouldn't be complaining. Let's talk about this market action today. Rajesh Palvia, Kush Bora on the technicals and derivatives, Siddharth Khemka on the fundamentals. Gentlemen, all three of you, thank you so much for taking the time out. Good having you. Let me just get the trade perspective out of the way. Rajesh, good afternoon. How are you looking at the trade today? Because the Nifty is flat, but the broader market's pretty active.
Good afternoon, Niraj. Good afternoon, everyone. So, looking at the market, yes, broader market is doing good. Mid-cap, small-cap space is buzzing today. Nifty is sideways as we have a weekly option expiry. So, I think looking at the data setup, 25,200, 25,300 is the major congestion zone at this moment based on the call concentration. And on the downside, looking at today's data, 25,150 to 25,100, this is the important put-based concentration at this juncture. So I think as we have already seen, dip of around 30-40 point in last couple of minutes. So I think if we able to hold out about 25,100, so I think some pullback action we could see in Nifty also from those level. So that level needs to watch closely for the day. So 25,100 needs to keep as a stop loss. Those who are purely trading for this weekly option expiry day on intraday basis. On the high side, one can book profits around 25,200 to 250 range. For Bank Nifty, 51,400 is the important level for intraday perspective. If we analyze till now, the Bank Nifty is still consolidating in very tight range. And the way Bank Nifty is holding above 51,400, I think there is a possibility that Bank Nifty may attempt to give breakout above 51,500 on a spot. And if it's happened, then some short covering action we may see in Bank Nifty, and then possibly Bank Nifty can attempt to move towards 51,600. So that's the view on index for purely for the trading point of view. On the stocks front, first stock where we are focusing, that is Avenue Supermart. DMart is the NSE ticker. So here we have seen a breakout for the stock. Almost 8 to 10 days consolidation range breakout is already taken place, and this stock is comfortably holding about to all its important moving averages for near term to short term. We are projecting target towards 5,400 for DMart, and one can keep a stop loss of 50 to 30. The second stock is UPL. Stock managed to give breakout on the falling trend line on the weekly chart. Very strong buying action going on in this stock since last couple of weeks. This is the fourth consecutive week where stock is making higher high-low formation. So that clearly shows sustained buying action is taking place in this stock. Chemical and agri-chemical theme is also doing good. A lot of stocks are showing good traction in terms of buying. UPL is on our radar. We are focusing for upside target of 648. One can keep a stop loss around 608. And the third stock is Copran Drug. Here also we have seen a significant volume action in last couple of days, and the stock is now moving towards its previous trading high of December 2021. So almost 3-year consolidation range breakout is going to happen in this stock as stock has already moved up about 330 mark. So I think if it's hold about 330, possible rally can extend in Copran. Possible target in near term to short term we could see towards 360. So with stop loss of 330, one can buy Copran also.
Okay. Copran, DMart, amongst others. Thanks for that. Kush, some of the stocks that you may have on your radar, because the index is lying absolutely flat, I would also want you to give me an update on JM Financial, which has had a really solid move ever since you picked it. What does one do there too? Good afternoon.
Good afternoon, Niraj, and I thought you'd never ask. I think we've been having this conversation for the last 2-3 sessions, and we've maintained a very clear view, which is continue to hold. Now, today it's entering the overbought territories. We are seeing some profit taking, from the higher levels. So it may not be a bad idea to perhaps, take some money, off the table, at least partially. But I would suggest that, you still stay invested in this. If you've got a trading position, continue to hold some of it at least. And, the first time around we discussed this was at the level of about 93 or 95, that about, thereabouts. So a stellar run, and in a matter of less than 10-15 sessions. So stupendous, gains to be made here, or already being made here. So as I said, if you've got positions, book out 50%, hold the rest, with a trailing stop loss of now about 115. The volumes are just piling on this one practically every day. So JM Financial continue to hold. And also, while we're speaking of updates, Niraj, do you know what the war cry is in a typical dealing room?
I have no idea, Kush. Never been in one. Maybe Siddharth would be able to tell us. Sorry?
We say Mal Lao, and
yeah, of course.
That's the kind of day we've had today. I'll tell you why. Yesterday we discussed Concord Biotech on the buy side with a 5% up, first target, and BHEL on the short side. Just that kind of a day. Of course, God and markets have been kind. Nothing that I have done extraordinary. But Concord Biotech has hit its first target of 1850, and it still went on to hit 1900, mild profit booking. And BHEL, on the other hand, is down more than 5% from the initiation price. So a long and a short call, both moving 5% is, I think, a very good day at the office. So my suggestion now, continue to hold both of them. Concord Biotech, you can put your trailing stop losses at about 1800 now. As far as BHEL goes, you can now put your trailing stop losses close to 278 mark. The momentum indicators, the price action, and the volume is still suggesting that there could be some downside left. So, like GM Financial, continue to ride the momentum on the upside on Concord Biotech and on the downside in BHEL.
Okay. Some updates there as well. Siddharth Khemka, is there a mal now feeling in the Motilal dealing room currently? Because the broader markets are doing extremely well.
So I will tell you, Niraj, we have been enjoying this ride for the last couple of weeks. Last 2 days, yes, definitely a little bit lackluster on the index side, but a lot of stock-specific actions, sector rotation at play. So every few days, you have a new theme that is playing out. And that, I think, would continue. As you said, yes, some euphoria is kind of now tapering off with the market slowing down, but definitely lot of mal now movements in the dealing room.
What is top of the pile, Siddharth? I mean, how is it that you're going about, and what is it that's finding favor currently? Let's start with that. Then we'll get to some of the other questions that we have.
Sure. So at this juncture, when the market is at peak and kind of taking a pause and a consolidation, a lot of focus is there on some of the defensive names. For example, consumer as a sector for last couple of days has picked up with names like Godrej Consumer on the staple side and DMart on the overall retail plus consumption side picking up pace. We are seeing some of them benefiting out of the overall growth. Also, a sector rotation plus the defensive nature in some of them.
Okay, fine. Let's talk about the stock of the day today. And since we brought up consumption, it would be wrong to not talk about Zomato, because that arguably, I mean, there are other stocks that are maybe up 7 and 10% as well. Gujarat Fluoro, Kaplan Point. I think just the meat in Zomato's move is pretty interesting. Puneet Johnson to tell us about what the JP Morgan note implies. Puneet.
No, thanks for that. They've retained the overweight rating and increased the target price to roughly around 340 rupees per share. This was earlier at around 208 rupees, so a big push. And this has largely been coming from, what they are looking at in the quick commerce segment, specifically on Blinkit. Now, they have mentioned, 3 to 4 key points about the business. The first one, that Zomato is spearheading, the retail boom in the country and, the consumer transformation via its quick commerce business. They have mentioned that, the company is looking to go deeper across the metro cities. Currently, they have about 400 to 500 dark stores. This will increase to 2,000 over the next couple of years. So big transformation as well as growth path going forward. Scale should also help monetization as well as, channel margins as well as ad spendings will be other two metrics that will be looking at to boost profitability, and as well as, incremental store economics will be better because of the large scale that they'll be able to develop. Now, they are expecting, JP Morgan is expecting that Zomato will be the lead disruptor of the modern trade segment as well as the e-commerce segment going forward, and they see that the going out business, which they've just recently acquired a part of it from Paytm as well, will be another key thing to watch out for. They've raised FY27 forecast by roughly 15 to 41% across the segments, and now see that quick commerce will form roughly 150 rupee per share value. This is up from roughly around 115% from the previous value that they thought about the company, about 50 to 60 rupees. So that's driving the valuation for the company, and they've also upgraded estimates food delivery business by 11%, which is already on a high base. So very positive note coming in on Zomato. Stock is also reacting in a very positive way as well. Back to you.
All right, thanks a lot for that. Certainly active in trade. So that fundamentally, I mean, Zomato appeals to you. Would you buy it if you didn't have a single share of Zomato, or your clients didn't have a single share? Would you go out and buy it today?
So, Niraj, if you look at this is, we believe, a once-in-a-generation kind of opportunity. Exactly the way someone would have expected internet kind of company to play out. Once you do the penetration, once you have the large clientele, and then you start monetizing it initially by they added the platform fee that made them profitable. Then the Blinkit turnaround. So the quick commerce business is now everybody wants to get into that. We have seen how valuations for Zomato has done. Yesterday, Swiggy numbers have come out. So I think that is another space. And now with that base and with the platform in place, they are also expanding into other segments like lifestyle. They acquired the entertainment ticketing business from Paytm. So it would the cross-sell upscale would continue. So I would believe that yes, the opportunity for such a company is huge, definitely. And we have seen a good, healthy profit booking and stock correcting from about 300 odd levels now to about 250 odd levels. We have a positive view and a target price of 300. So that's a good, decent upside from current levels. But I feel the upside would continue with every new venture playing out and start delivering profits going forward.
Okay. Well, big move there, 5% on Zomato. Kush, your ideas and maybe a word on Zomato as well.
So Zomato fairly comfortable with the kind of move that it's seeing today, in the sense that we were talking about buy on dips. There was a gap around the 235 to 40 mark, almost about filled. Today's the first day of recovery, so you might want to be a little cautious if you're a trader. But if you are in this from, let's say, medium-term perspective, 3 to 6 months, then I think these dips are a good time to enter. Now, a positional stop loss on this one would come near that 235 support zone. On the upside, you're looking at 275, 295 kind of levels. Now, as far as my pick for the day go, one of them is Pokrana, not to be confused with Kopran, that was just discussed a while ago. Pokrana, I mean, not a very usually discussed stock, but has been seeing very interesting, price and volume action over the last couple of months now. A very clear breakout on, on the charts in the last couple of days. I think this uptrend momentum could continue for 1050, 1100 kind of moves. 950 is your stop loss. JK Cement, this stock from the cement pack has been buzzing, for a while. We're seeing a positive crossover, a golden crossover here. Volumes are also up for the last 3 days consecutively. So I think this one also has a lot of steam left on the upside. 48.50, 49.95 are the levels to look at on the upside. 46.60 is where you place your stop loss.
Okay. So some other buzzers this afternoon. Let's just pull up PTC Industries. PTC has, its arm actually has an order from Israel Aerospace to supply titanium cast components. That stock saw a bit of a spike and then has come down, has come off. Easy Trip is another interesting one this afternoon. So Easy Trip wants to get into making e-buses. I'm not sure why. We'd actually love to get the management in and ask them what this plan is, but they're going to invest about 200 crores for this. That stock has zoomed up about 12% at this point. And those are some of the buzzers. UPL is another one that has been buzzing in trade. Some notes out there, of course, apart from other reasons, and UPL also on the radar. Let me come to Rajesh on this. Rajesh, any of these counters that you're tracking this afternoon?
So definitely, Tamanna, UPL is in my buy list also, and we have already initiated this investment, short-term investment idea for our clients also, and we are focusing for target towards positional target of around 700 for UPL. The way stock managed to give breakout on the long-term chart, if you analyze on the weekly chart as well as on the monthly chart, falling trendline breakout is clearly showing that after a long underperformance, now stock has shown the sign of reversal on a long-term chart. So we could see, continuation of rally towards 700 also on a positional perspective. So UPL one can buy and accumulate for positional as well as for trading cost point of view also. Your stop loss should be now placed at around 600 rupees if you're buying it for, positional perspective.
Kush, UPL is another stock that you've been tracking as well.
Rather closely, I might say, and then about 525, 530 is when a turnaround did kind of, was looking like there's a good likelihood. I'm glad that there is confirmation from Rajesh's side as well. A lot of chemical names have been seeing traction, while this stock has been an underperformer. The recent action is indeed suggesting that there is a lot of upside. 660, being the 200-day moving average, could act as a near-term resistance. But I think once that is taken out, I do agree with Rajesh that perhaps a 700 or higher levels are definitely on the cards.
Siddharth Khemka also with us today. Siddharth, hi, how are you doing? And, great to speak with you this afternoon, especially when I would say that markets are overall bullish, but there is a bit of lack of clarity on what direction you would take. And let me come to you on that point. We spoke a little earlier about how banking stocks have been doing relatively okay. Today, Bank Nifty has been a relative decent performer. Do you see pain points now behind us for this space in this sector?
Hi, Tamanna. Good afternoon. Glad to be on the show. So if you look at in terms of banking, we have been positive for quite some time. We believe that at least the NIM compression is now behind and we could see some stabilization in NIMs. The bigger pain point for some of the banks, especially on the private banking side, has been on the deposits growth. Credit growth has stabilized in the 12 to 13% range. However, the deposit growths for some of the larger banks have been in mid-single digit, and that is where some of the banks are facing the pain pressure. What we believe is from here, some of the public sector banks would continue to do well, mainly on back of the earnings growth momentum that would continue while the asset quality improves further. Further valuations for some of these public sector banks have been still at a much discount to the larger ones. Having said that, with the overall market now consolidating at higher zones and overall banks being a stark underperformer in the past, we believe some of the banks purely by way of the sector rotation could come into action in the near term, especially some of the larger ones. With the public sector banks, our preferred pick is SBI, and within the private sector banks, ICICI Bank, which clearly came out with very strong numbers compared to a lot of other private banks where both growth as well as profitability was a bit subdued. So ICICI Bank came out with much stronger numbers and the growth outlook remains pretty strong. So within the overall banking space, in the large cap space, we would prefer an SBI followed by an ICICI Bank.
What about some of the smaller players or the small finance banks? Today, your Chola Fin, your AU Small Finance Banks buzzing. Also, AU Small Finance Bank, because you've applied for a universal license. Are you excited by these stories?
Yeah, so I think that is a good, if whenever that happens, that would be a good transition and a good roadmap for any you can say financial company where that is what the intention was for RBI to open up the banking system, not directly, but through a controlled license. As a small finance bank, you had a lot of restrictions but also given a runway to prove their mettle in the banking space, in the financial services space. Chola, the name you've taken, has been one of our top preferred picks within the NBFCs. They have a diversified book between home loans, between vehicle loans and other business SME loans, and they've managed the business cycle well across the cycles. One of the most, you can say, conservative promoter group of from the south, and consistent delivering profit growth quarter after quarter. And on back of that, the market has definitely rewarded them. They are now among the, you can say, top valued or the premium valued NBFCs. So yes, we like some of these names. AU, again, from the small finance bank, we like that growth has been pretty strong. Retail growth was something that had got hampered in between, but again, this year with consumption demand improving, monsoon being better, and the rural sector picking up, we believe some of these smaller banks with regional focus could also start doing well.
Okay, Siddharth, we let you go on that note. Thank you so much for taking the time out and being with us. Really appreciate your time this afternoon. Look forward to see you more often.
Thank you.
All right. Well, the area which is slightly difficult to decide or decipher about investing. In fact, it's a question which keeps appearing in all our conversations about whether financials should be bought into or should be avoided. What is the way ahead for the financial sector? And are the banks, more importantly, rightly valued? UTI AMC's Vetri Subramaniam and Piper Serica's Abhay Agarwal have very different and opposing views on the same. Hear out their view.
if there is one sector where we have comfort in terms of valuations, it is actually the entire banking and financial services space in general. This is one of the few sectors in the market, and thankfully it's also a large sector in the market. So we can put money to work in this area because here we have valuation comfort. Well, is credit growth slowing? Of course it is, but I would also submit that it had been very high. Remember, nominal GDP growth, even if you look at the release which came out for GDP growth, nominal GDP growth is currently below 10% in the economy. So in the context of nominal growth being below 10%, a 13 to 14% credit growth is quite comfortable. Remember, RBI itself has been, sort of tackling some parts of the economy or some segments of lending where it had been growing very rapidly. They've actually tried to get people to pull back on that. So there is both an impact of slightly slower growth in the economy as well as actions by RBI which are causing this credit growth to come in slower than where it was a year ago. But I don't see that as anything more than cyclical. And I would actually submit that if credit growth were to turn down significantly, we would have a lot more to worry about, because that would be an indicator of significantly slower growth. And significantly slower growth is going to hurt the areas which are priced for growth rather than an area which is not priced for growth. So, my investing philosophy for many years, Niraj, has always been that cheap valuations or attractive valuations are a function of the market being unable to look beyond current data, but that is where the opportunity is. The opportunity is not where the market perceives the future to be bright and blue skies, and then it's already priced to perfection in those areas. So it's a question of how you think about investing. There are issues in banking, but I'm happy that there are, because it's giving me that opportunity to get invested in an area where I have valuation comfort.
The cost of money, cost of deposits is going up. Deposits are more scarce to get. Cost to income ratio is going up across the board. We're seeing because of higher rentals, attrition, salaries. And then you have higher NPAs kicking in. Collection efficiency has down from 98% to 94% for microfinance industry. So there is struggle on all aspects for lenders, including banks, private banks, public sector banks, and NBFCs. Three bets that we already have there. One is, which has been with us since post-COVID, which is what we call capital market infrastructure players, CDSL, CAMS, Angel One, because if the capital markets have to grow, which they will grow, these companies make a lot of money just, because they're basically tech companies that are benefiting from the macro investment theme. The second part is, which is more recent, about 6 months ago, is the insurance players, because we saw a long sideways correction in health insurance companies, in general insurance companies, and in life insurance companies. And after doing a lot of research, we finally placed our bets. And this is not by recommendation, but our model portfolio is known in the market. So we have ICICI Pru, ICICI Lombard, and Star Health in our portfolio, because we think that this is a space that has been ignored by the investors, and finally the regulator is getting more friendly.
completely flat on the markets. It's been, I would say, a range-bound but volatile kind of day. And it's all about the broader markets, really. I mean, look at the small cap index and compare it to what the Nifty is doing right now, and you'll see where all the action is. It's definitely not in the Nifty and the Sensex. But what is the futures and options picture looking like? Agam joining us for more on that. Agam, as listless on the key indices?
It certainly is. It certainly is. And, I think a lot of traders today were very, very cautious about going ahead and selling options on either side. And it does seem like it was one of those days where there was too much expectation of volatility. It really didn't come through. And there was a steady contraction in option premiums as well, a steady decay throughout the day. So everyone who did, in fact, go ahead and sell options, well, it does seem like they were having a good day of trade today. The Nifty, of course, coming off by around another 0.25%. And it will be the second straight day of losses for the Nifty. The open interest has hardly changed for September futures. The Nifty Bank, again, we are looking at a little bit of an up move there, marginal so, and very little change in open interest there either. Well, in terms of the options market, we're likely closing between 25,100 and 25,200. And that's exactly where we have seen the most amount of traction. In fact, everyone who had gone ahead and sold, those respective calls and puts are most likely turning into a profit today. And in terms of stocks too, we're looking at Max Financial and Chambal Fertilizer looking at good amount of traction towards the short side, longs for Muthoot Finance, among stocks which are seeing unwinding, about a short covering for Vodafone Idea, LIC Housing Finance, as well as PVR, Inox. So a handful of counters still advancing in trade. The positive, I suppose, is that the market breadth is still inclined towards the gainers, and that perhaps can be taken ahead into tomorrow.
All right, thank you for that, Agam. Kush Bora, Rajesh Palve with us. Let's focus on what should be the strategy for tomorrow. Some of the stocks both of you have spoken about, but on the indices, I mean, which are the sort of key specific bets you would take? Rajesh, let me start with you, and let me start with some of the winners today. Let me talk about Ola Electric. Let me talk about Zomato, and let me also talk about Gujarat Fluoro. Gujarat Fluoro, one which is seeing large volumes, no clear news trigger right now. But would you sort of see a bet that goes into tomorrow as well at these levels at 3,540 right now as we speak?
So yes, definitely we are still holding our bullish view, and we are looking for the buying bets only in this market as Nifty is comfortably holding 25,100, 25,000 levels. So I think till these levels are intact, our biases remain on the bullish side. As you spoke about some of the stocks like Zomato, Ola Electric, or Gujarat Fluoro, I think after correction now Zomato is trying to recover from its recent low. In this correction, yes, the stock slipped below to 20-day moving average, but still holding about 50-day moving average. A long-term structure for the stock is on the bullish side. The way stock is showing buying interest in today's session, I think if it continues to trade about 250 mark, I think there could be some more pullback action we could see towards 264 to 266. That's the immediate congestion zone or supply zone for the stock. If at all stock crosses about 266, then stock may attempt to move further higher to record a new all-time high also. So I think Zomato can be looked at to buy in this correction, and I think 248 should be your stop loss if you're buying at current level, and possible target we can see towards 266 to 268.
Okay, 266 on a Zomato. Kush, you have a take on Zomato?
I do. I think this is a good opportunity to accumulate. While we've seen a bit of a bump up today, it's still off the highs. So any kind of dip that comes about should be taken as an entry opportunity. 235 remains a stop loss. 275, 295 are the targets that you're looking at. So the bit of profit booking, I'm not sure it's entirely complete though. But even if this sort of consolidates sideways, it's still a good buy from a medium term perspective.
Devin Choksi joining us now, and Devin bhai, very good afternoon. Great to have you on the show, and just get your perspective on really, what is the kind of mood we're seeing? Are you seeing a buying opportunity over here? And clearly, in the broader markets, that is being spotted. But on some of your blue chips and some of your Nifty stocks, anything right now that you think is valued well enough to create new positions?
Hi, Tamanna. Good afternoon. Well, obviously, I think some of the portfolio stocks, I think, which are part of the Nifty, definitely, I think they remain favorite for us as far as accumulation is concerned. We have been up till now accumulating the likes of Bajaj Finance, Bajaj Finserv, but of late in last 5, 7, 10 days, I think they have moved up. But otherwise, I think they have been offering a good opportunity. Similarly, I think current situation, leave aside 1 or 2 quarters, I think you find metals as a good choice to accumulate. Somewhere, I think some of the biggies like Lever, Hindustan Lever, Nestle kind of companies may also be, I think, partly giving that opportunity to one, I think, for buying into the portfolio. And I think, of course, the BFSI space, particularly the insurance companies, where we believe that overall growth environment is, I think, becoming quite stimulative from the perspective of looking at 2 to 3 years from now. In my viewpoint, I think these companies are having better times going forward. And fortunately, they are not so very expensive as I see it in the portfolio. So from that perspective too, I think we are protecting the downside and at the same time buying something which is quality in the portfolio.
Okay, well, that's one thing. And you know, the other thing is pharma. And before I get Devin Choksi's view on pharmaceuticals, let's talk about the last 2 days, because select pharma stocks have been buzzing with one possible trigger being the US Biosecure Act. Now, a lot of you must be wondering, how does it affect the companies? My colleague Varsha is here with the details. Varsha, good afternoon. Take it away.
Well, thanks, Niraj. So yes, we are seeing this pharma stocks, particularly CDMO companies, buzzing since yesterday. Now, this is because one of the reasons may be the US Biosecure Act, now which is to be introduced in US next week. Now, let's see what this US Biosecure Act is. So basically, this act will ban US companies from partnering with certain Chinese biotech firms. Now, why this is being done? This is being done to prevent misuse of US genomic data. Now, with this, US drug makers will actually shift to Indian CDMO companies for fulfilling their supply. And this will be a potential benefit for Indian pharma companies if this act is being passed. And Indian firms will actually replace Chinese firms. Now, when I say Chinese firm, why the highlight is being given to Chinese firm? Let's see the industry dynamics, wherein China's CDMO industry holds almost 8% share of global market, whereas India's CDMO industry has a smaller share of only 2.7%. So huge opportunity Indian pharma companies have. And also this act will actually boost India's position when it comes to global CDMO market, and this is an opportunity for Indian companies to challenge the China's dominance that it has been have. And let's see if we do have Indian pharma companies do have increased inquiries. So technically this data is from India Ratings, wherein 60% of listed Indian pharma firms have seen more business inquiries, out of which 33% believes that act could give a business growth for these companies. And also Indian companies are expected to see increased orders in next 10 to 12 months from US, and the companies are also getting pilot projects and RFQs as well. But everything is not good when it comes to US Biosecure Act, when it comes to Indian pharma companies, because we do have certain challenges wherein Indian pharma companies lag when it comes to experience, and also the technology is not that advanced. So these are the key challenges when it comes to Biosecure Act.
Varsha, that last point is actually an important one, because the opportunity exists, but are companies really in a good place to take advantage of them? So why don't you break it down specifically to which companies are placed well to benefit from this Biosecure Act?
Well, so especially CDMO companies will be actually bearing a fruit when it comes to US Biosecure Act. So few companies that could actually benefit are Syngene International, then you have Laurus Lab, then Newland Lab, Divi's Lab and Suven Pharma, because these all companies are more aggressive when it comes to CDMO business. Now, we do have snippets of con call wherein few companies are actually bullish on when it comes to this act. So starting with Syngene International, where they are expecting good opportunities when it comes to Biosecure Act. But according to Syngene, larger companies would be more aggressive when it comes to giving the contracts to Indian pharma companies. Then we have Laurus Lab, wherein again they are bullish, but according to Laurus Lab, this is not a 2 months or 3 months game. This will take time to US pharma companies actually shifting their supply to Indian pharma companies. So this will take maybe a year or two to come into intact. Then we have Newland Labs, again bullish on this act, but Newland Lab is not actually expecting much business when it comes to CDMO. They want to focus on their API business where they are actually good into. And lastly, we have Divi's Lab, wherein with the expectations of US Biosecure getting passed, they are actually seeing spike in opportunities. So these are all the companies that will actually benefit from this act.
Thank you for that, Varsha. Nicely put together and a lot of details there. Now, there was a buzz yesterday in some of these counters, and we'll see if, they're still showing that kind of an action. Newland, Divi's, some of those we talked about mildly in the green over there. But Deven Choksi, I'd love to get your view on the whole pharma story. This is one of those, chup chap. Pharma companies have come in and, have been rising, seen very often as a defensive play. But is there more to that story than just the defensive play angle?
Yes, I think two things. One, of course, I think the API and the CDMO companies, a bunch of Laurus and the DV's kind of companies which we are talking about. Also because of the fact that I think both these companies have expanded the capacity to meet the requirement of the customers in certain category of products, I think on the API side, as well as on the CDMO side. Till yesteryears, I think they were having some challenges in form of offtake. I guess I think that challenge is also over as confirmed by DV's and also partly by Laurus. So to a greater extent, I think they are basically having the larger roadmap clear as far as the supply to their customer is concerned on the CDMO side. On the other side, the pure play generic companies, but more importantly, the likes of Sun, Cipla, Dr. Reddy's, Lupin kind of companies, where they have got a complex generics in their portfolio, which is giving them an edge or the advantage compared to others, particularly when it comes to US market. And that's where probably they are not only meeting the requirement of the pressure of the generic products, but they are also making, I think, good amount of margin from these products, as can also be seen in last 1 or 2 quarters of the working of these companies. So we remain distinctly positive about the companies with the ability to be in the generics products, specialty generic products. And I think the API and the CDMO supply. So select companies in the pharma space, they definitely remain a good choice. Maybe 15 to 20% kind of an appreciation in some of these stocks possible over 12 to 15 months time.
Another news flashing on your screen on Reliance Industries, the board has approved a 1:1 bonus issue. Now, this news came in earlier this week, actually on the day of the AGM, and was known. But the official approval has come in now. The stock tad lower at less than 1.5%. Devin, just your take on RIL. Also from the point of view that one of the things that the street was perhaps looking forward to was clarity on listing of Jio as well as Reliance Retail. Do you think that's still the next big trigger for the stock?
So yes, Tamanna, I would like to believe so, because on one side, they have capitalized their reserves. Though I agreed that I think on a 7 lakh crore worth of reserves in the portfolio of company or the balance sheet of the company, they are capitalizing 6,700 crore worth of equity by way of 1:1 bonus. But at the same time, when you capitalize your reserves, at that point of time, I think you do give an indication on 2 counts. One, your ability to service the business, henceforth on an expanded equity, remain high. And the second important aspect, I think in this case, Reliance's cases, that having capitalized, I think they are giving the dues to the existing shareholders and at the same time now ready for demerging the businesses which we are looking at. I think the Geo platform and retail in particular, they probably, I think, are showing the signs of being ready for that purpose. So I would think that, would not know exactly the timing part, but I would think that I think the demerger process or the monetization of existing businesses like Geo platform and the retail would be happening sooner than later. That is what my take would be. So let's wait and see. But overall, I think that's the indication that one gets, I think, after this capitalization process.
Okay, interesting story we have for you. And, you know, we keep talking about how savvy investors are getting and how IPOs are the entire craze. But for, of course, marquee investors, pre-IPO is where the game is. Now, guess which company has the interest of Aamir Khan, Ranbir Kapoor, Karan Johar, and a slew of other top investors? This is a Pune-based company called Zolopack. What does it do and why does it have Bollywood biting? We have that detail coming in from Rishabh.
As the SME IPO buzz sort of grips the nation, we have Bollywood also investing into SME IPOs. The latest one is Zolopack, which is an NSE Emerge IPO bound company. It has received investor interest from Bollywood stars like Aamir Khan, Ranbir Kapoor, and Karan Johar. It is also being invested into by Russell Mehta, who is the father of Shloka Mehta, who is now married to Akash Ambani as well. What Zolopack does, it is a sustainable packaging company. It is mainly into manufacturing of ice cream spoons, ice cream sticks, and also wooden cutlery. And hence, some of the major clients it has include Amul and Mother Dairy. A bit on the IPO itself, they are looking to raise upwards of about 40 crores from the IPO. They will sell about 53 lakh shares. This is a pure fresh issue IPO that is coming up on the NSE Emerge segment. While we don't have the details of how much Aamir and Ranbir have invested, we do know that about 34.5 crores is the worth of the pre-IPO round in total. And we don't know because the RHP has not been submitted to the SEBI yet. So a listing for Zolopack is possible only in October or November. What we're also seeing is that Aamir Khan and Ranbir Kapoor especially also invested in Dronacharya, which was a company that listed a few months back on the SME IPO segment. Apart from that, moving to the main board, we also had Katrina Kaif and Alia Bhatt come in as investors to Nykaa, and they also sort of reaped a lot of profits from that. So with this SME IPO buzz, we'll continue to see more and more, and it is interesting to track how these smaller companies sort of get into the big leagues and also attract investor sort of this buzz from even larger actors like Ranbir Kapoor and Aamir Khan.
Okay, all right. So yeah, I mean, Bollywood is getting fairly savvy, especially at the pre-IPO game. Deven Choksi, I wanted to get your view on the whole IPO buzz. You had a Raymond Lifestyle listing today, a whole slew of IPOs right now coming up ahead. SME IPOs are in focus for a whole host of other reasons and perhaps not very positively. But people watching this might be thinking, well, if the stars are investing, then there's something right.
Well, I guess I think one can look at the company more specifically, then only can answer this question or the reference that you made. Well, on the other side, I think the serious note about the IPO business. On one side, we are seeing a significant amount of post-IPO activity wherein the existing investors book their profits and take money home. Not bad at all, I think. That is a right answer as well. I think we are not doubting that. However, the fact remains that I think one needs to look at the current IPO process by itself, the way in which I think the IPOs are being conducted. There is a significant amount of artificial demand getting created in the IPO process by way of building the book and all. Today, you are in a digital market, online market. I think suppose if you really want to, I think, carry out the IPO, I think you can basically carry out the IPO on a first come first basis on the screen. And I think make the supply available to the person who is buying first and I think complete out of it. That may be, I think, a better approach than to honestly create a book and then give the ration allotment out of it. There is a need to look into this particular process per se. They have actually, I think, done some improvement by way of stopping the finance in the IPO. But though it is in personal capacity, people are still borrowing and putting money into IPO. That's a different issue. But it is institution finance, they have stopped it. That is a good move. The next move had to be taken of processing the entire IPO online as against building the book and creating unnecessary demand. Let market discover the price moment I think this particular process get through, instead of I think creating a demand and then allow market to get influence with the price. That's the whole point here.
Just on, I'll ask a follow-up on Raymond Lifestyle, and that's had a very, very strong listing, about 83% up on that listing. We in fact spoke with Gautam Singhania. We'll run that bite also for our viewers, and my colleague Mahima caught up with him and talked to him about how, and he said that he's not going to go into women's fashion, etc. But the Raymond Lifestyle stock doing very well on his D Street debut. Now, Raymond bhai, just to take the point that you were making, you're saying let the market discover the price. Now, obviously, those who have got the allotment are feeling quite happy today. The others are saying, well, perhaps I should have invested. Most are anyway exiting, 50% are anyway exiting in a week. Any views specifically on Raymond Lifestyle?
In broader sense, I think I would say, because since we don't have the coverage, I think observing the company from outside without coverage, I would think that I think the move is right and strategic. On one side, I think you're creating a pure focus retail franchisee by way of demerging the business from real estate. And to a greater extent, I think that's a way to go, because real estate per se is a different ballgame altogether versus the lifestyle business that they're talking about making it happen. So to a greater extent, I think that is a good challenge, a good possibility also at the same time. Maybe valuation accretive at the same and on an apple-to-apple basis, one would get a chance to compare this business, I think, along with the other businesses existing in the listed market. So yes, I think we can probably look at it from that angle. But since we have no coverage, I would refrain from putting across any numbers and the valuations at this point of time.
Okay, my colleague Mahima, of course, caught up with Gautam Singhania. Here are the slice of that conversation.
I think it's great. I mean, you said yourself is 99% up, and I think that's good. And from here, the only way is up. So we are focused on creating shareholder value, which is what we have said. And this is a one step in that direction.
Absolutely. And you now have three companies under the Raymond Group. What are the kind of growth levers that you're expecting? How are you planning to stand out in all of these three businesses?
Well, each one has its own strategy, but eventually what creates shareholder value is what we're looking at.
Absolutely. And one last question, Raymond Lifestyle has always been about the complete man. Do you plan to also foray into the women wear business?
We've completely stated we're not getting into the women's wear business.
Well, that's Raymond Lifestyle. Raymond Lifestyle and Raymond have had contrasting fortunes today. But speaking of fortunes, can you make one with a good closing strategy? Let's ask our experts that. Rajesh, I'll come to you first and then go to Kush on what could be a top closing strategy.
So Niraj, some of the stocks which we are focusing for BTST point of view. First is Lakshmi Organic. LXChem is the ticker on NSE. So Lakshmi Organic is looking bullish. The way stock is now making a rounding bottom sort of formation on a weekly chart, we believe that here we could see a follow-up rally. 320 to 325 is the next target for the stock. Keep a stop loss of 296. The second stock where we are bullish at this juncture, that is NAM India, Nippon Asset Management. Here also we are seeing that this is the fourth consecutive day where stock is showing good traction. Stock is comfortably holding about to 20-day moving average. The way stock managed to give breakout over the last 4-5 days trading range breakout. So NAM India is buy for upside target of 740. Keep your stop loss around 699. And the third stock where we are focusing is GNFC. Here also we believe that the way stock is moving in upsloping channel on daily chart, there could be a possibility that this stock may exhibit good amount of rally towards 730 to 735. So GNFC is buy with stop loss of 696.
Interesting, and a lot of chemical names featuring in the list today of buzzers. So that's interesting. By the way, just look at, since we are talking of buzzers, look at Nahar Poly, some big moves there for that one. Chavandal Setia Exports, Wellspun Investments, all of them have shown a spike in the last few minutes of trade. So some big moves happening in specific pockets. Kush, your top closing strategy.
So, Niraj, continuing with this theme of buzzers, I think in the last hour or so, last hour of close, the IT stocks are showing, a fair bit of strength. You look at someone like something like a Coforge, quite a bit of move there, and a lot of these names are actually closing at the high point of the day, suggesting, that these might perhaps be a good BTSC candidate. One of them that could be considered is Infosys. Again, very close to the high point of the day. There is a possibility that tomorrow you could look at a 1955 and a 1970 kind of an up move on this one. On the downside, the support comes in at about 1910, and also just as an update or perhaps even as a fresh take if someone wants to consider is Shriram Pistons. We've been talking about it. The first target 2200 has been hit a couple of times already, but the stock is consolidating in that range. Not a bad idea to perhaps consider this for the next target of 2300. You could now move up your stop loss up to 2120.
Devin, what would be your strategy for tomorrow, considering that we've not really seen any clear breakout or any clear kind of pattern in the markets in the last few days?
So I don't know whether I can spell out for tomorrow, because I think generally my
call
approach
is
has
longer.
been in the market.
Yeah.
So, but I think we find ourselves very comfortable with some of the NBFC companies, some of the large corporate banking businesses, insurance businesses. We find ourselves comfortable. And at the same time, I think the EMS business on a B2B side, particularly, I think the companies which are engaged in the business of supplying to railways or the defense, I think those companies are relatively stronger. They are plugging in well with their OE partners. So from that particular way of looking at it, I think we find some of the mid-tier EMS companies looking relatively more interesting, particularly the fact that, like defense, you are likely to see the opening up of the new contracts for the railways in the next week. And that's where Kavach kind of a product could possibly invite exciting interest from some of the two-tier, second-tier players in this space. So one can look into those companies also selectively, though they are made for long-term investment. But still, I think if one wants to play momentum, I think this is one opportunity that one may get in coming days.
Interesting. Okay, well, all of you, thank you so much for taking the time out and being with us today on India Market Close on NDTV Profit. Really appreciate your time. A minute and a half left. Let's start wrapping up the markets for you and bring up the intraday of the Nifty as we wrap up trade. This is, 0.18%, but jagged edges with a very narrow band in which the index has moved. So that's the key point. Look at this very narrow band that the index has kind of stayed around and closing in about 0.18% lower. The small caps on the other end have had a really good day of trade. More than the mid caps as well, which is actually a good sign, and about 1% higher, so which is actually a very, very good. Individual portfolios must be smiling. Yes, the Nifty 50 heat map just about more in favor of the red than green, but it's the pharma pack, to an extent Reliance, which is corrected in trade, and FMCG, so a bit of a defensive set of stocks getting corrected. On the flip side, Titan closing in at the high point of the day. Some bit of strength in IT, the likes of LTI, Wipro, BPCL, etc. doing okay. Infosys also giving company. So that's the long and short of the large cap end of the market. Tamanna, mid cap end of the market, enough and more stocks out there flying around.
Yeah, absolutely. In fact, that's where all the action is, frankly. Look at Gujarat Fluoro. Ending on top of the heap, about 12% up. Easy Trip is an exciting story. We hope we get a chance to speak with Mr. Pitti at some point and ask him why he wants to make electric buses. But 10% up there. They're also spending 200 crores on R&D. Kaplan Point has been seeing massive volumes. There's a bit of a auto anch play as well. Look at a TVS Supply, look at a Craftsman Auto. Both of these doing fairly well. So these are some of the key movers today. I think Zomato will end up as another strong day, 5% up nearly as we head into close. You are seeing a Syngene, Laurus Labs and the likes showing a lot of action second day in a row. I want to see where PTC has ended up after the big deal they have with an Israeli company. actually has lost most of its gains and down about nearly 0.5% at this point. CCL products I thought was also interesting. So you're seeing a clear profit booking kind of a phase on the sell side. So CCL products, which has been buzzing the last couple of days, has lost steam today, was in the red right from the get-go, 6.5% down. Mazagon Docs, the other one, which has seen some profit booking coming in, now about 4.5% down. Prestige, Oil India, Chambal Fertilizer and Torrent Power are some of the others that are in that category. But all in all, I would say not a bad day of trade. We've ended pretty much flat. So we've bucked the trend across the global markets, which has been fairly negative. Now, all eyes on key data, which comes out tonight. This evening, actually, India time from the US, labor indications that will come out. And it's the unemployment data that we'll be looking at today. Of course, the non-farm payroll data that comes out the day after also becomes quite key. That will set the mood for trade tomorrow. But for now, that's all we have from Niraj, me and the entire team that puts the show together. Thank you so much for joining us. Stay tuned, a lot more on the other side on NDTV Profit.